Welcome to the NGEN Markets Training session. Meanwhile, others are joining in. We will start with our today's session. So today we are going to discuss about mutual fund portfolio comparisons and how you can add, portfolios of mutual funds and compare them with several other model portfolios. And then we are going to head towards a Q&A. So if you have any questions, you can either write on the chat box or verbally, and we will answer them up. So let's go ahead. I hope my screen is visible to everyone and my voice is audible. So just a second. Yeah, as you can see, this is the engine terminal we have, and here you can analyze a lot of things. But here, what we are going to discuss today is how you can compare mutual fund portfolios. So before comparing any mutual fund portfolios, you need to have certain prerequisites. You need to add portfolios into the portfolio section, or either you need to have clients to be onboarded as an RTA. So here, whenever you want to add any portfolios into the portfolio section, all you need to do is just click on this, add a new portfolio. There are a couple of options given here. One is ISIN from Excel, CDSL CAS PDF, NSDL CAS PDF, CAM summary report, which you can easily add. All you need to do is just click on this, add the file password, and upload the CAS statement. This will help you to add in any prospective client into the system. And once it is added, it will look something like this. So this is the portfolio generally, added into the system, where you can just, type in a name and the client, you can create it and add it as a folder. So I will talk about, how to, create folders and, manage the folders as well. But here, once you run the portfolio, you will see the portfolio analytics is running something like this. Now here, the main, purpose here is that you can save the portfolio here in your folders. So, here, I will show you a couple of folders here. Uh, I hope I'm audible to everyone. Is my voice audible? If not, please let me know in the chat box. Yeah, sure. So yes, so basically, if you really want to compare mutual fund portfolios, there are a couple of ways. One way is directly head towards the compare section directly from clicking on this button, compared to portfolios. And another way is directly going to this compare section in the left side and this compare portfolio section given here. So both of the ways will actually give you this particular section altogether into the system. Now, once you have this section is pretty useful. First thing is that you can add the portfolios here in the left and the right side. So to do that, all you need to do is just remember the names of the portfolio. For an example, let's say I want to add a prospective client. So let's say this one, right? This client has been added into the system in the left side, and easily you can add in, your own uh, you can also add in your own portfolios or any sets of model portfolios into the system. Now here you can see this is one portfolio added with the price series and with certain start date. Now you can either change the start date from, according to you. Let's say we are taking this as a consideration, and then we can add our own model portfolio or any sets of a portfolio here in the right side. Now here, let's say for an example, I'm adding a model portfolio just created into the system like this. So here you can see that, this is how it works out. Uh, you can see this in the left side, and in the right side, we have added two portfolios one by one. So basically, once you added the portfolio, what you can see is, uh, hello everybody, is my voice audible? I'm just getting a message that not able to listen. Um, if anybody can, let me know if my voice audible or not. Okay. Okay, sure. So here, yeah, so let's continue. Here, what you can do is you can basically compare two portfolios just by adding the client and the portfolio section in this, and then you can easily compare the parameters here. So we are gonna walk through the parameters one by one. A very important parameters which we have shown is the performance chart. Now the performance chart here, you can see we have already had a preset, which is the from 2nd November 2015 till till 10th November 2022. This is what we have done as a custom start date. Now, this start date you can efficiently change, first of all. Second thing is you can easily see the annual return difference in the left side. So this is annual return difference, also the Sharpe ratio. So this annual return difference is basically the difference between the model portfolio and the client portfolio which you have added. So here you can see that we have plus 6.20 annual return difference. It just basically means the right portfolio which we have added is actually having an alpha of plus 6.20 against the left portfolio. And then what you can do is you can also check what is the Sharpe ratio difference between the two portfolios, which is also given there. And here you can also check the correlation between the two portfolios. So this will show you that how correlated are these portfolios. And in this chart, you can see it is 0.95, which is a very high correlation. And basically these both are equity portfolios, so they are predetermined to have a high correlation. And here you can also see the difference in the statistics, which is pretty useful, because here you can easily see the MTD, the month to date, the year to date comparisons, 1 year comparison, 3 year comparison, 5 year comparison, and also the comparisons of average annual return. Now this is actually the average annual return difference. You can see that is 6.20, and that is how it is given in the left side. Plus you can also see the daily average, average daily, average monthly, and average yearly comparisons in this comparative performance chart, with the up months, down months, and also the down years as well. So it gives a proper set of idea that if you're looking towards the performance of the two portfolios, how the performance has been for a right portfolio which you have added, and how the performance of that left portfolio is given, which you have added into the system. So that's basically it. And what you can easily do is you can also check the asset allocation between the two portfolios. One of them is the asset allocation comparison. So you can easily see the comparisons between the two. So this is divided into two half. You can see these three tabs are the asset allocation of this left portfolio, and these three tabs are the asset allocation of this right end of the portfolio. And you can easily compare the asset allocation just by hovering your mouse. And you can also compare the asset of the debt side of that particular portfolio in this system. So whatever portfolio you add, the asset allocation comparison is given on the equity basis as well. You can see the equity sector comparisons, also the comparisons of the YTM and the net YTM. So in this left side portfolio, it does has some of the couple of debt securities where in the right side there isn't. So that's pretty much it when you look towards the comparisons of asset allocation of any particular set of a portfolio. Then we also have the exposure comparisons. So exposure comparisons gives you an idea that if you're holding the top exposures through all these mutual funds, so what are these top exposures in the in this portfolio. And you can easily see on the equity sides, these are the top exposures, whereas on the equity side of the model portfolio, these are the top exposures. So you can check that for any particular set of a portfolio added into the system. And one important thing here is that whenever we check the start date, right? So whenever we change the start date from 2015 till 2017, so you can easily change it up, you will definitely see that there will be a change in the performance between the two portfolios. Now how do you gauge the comparisons, as this performance is pretty much point to point? Whenever I change, I will see the annual return difference will also change. Like for an example, if I change it to 2019, there will definitely be a change between the annual return difference. So here, rolling a return comparison can come into play, because here, as you know, that the time frame matters when when you take your position in a portfolio. You would definitely want to know that if we are taking this position every single day. Now rolling returns in engine is calculated daily. So every single day for a 1 year period, which is this given year, 1 year period, what is the average return? So you can see the average return of this portfolio in the left side is 24%, whereas the average return of this particular portfolio of model portfolio is 35%. So this is actually calculated daily. So any particular set of date you choose, like for an example 2012, so for a long run, if we compare both the portfolios on the basis of rolling analysis, you can easily check a 1 year average, which is given as 14 versus a 1 year average of this portfolio, which is 21.62. So efficiently, this portfolio in the right side is a superior portfolio on the basis of historical rolling analysis. And here, you can also check a couple of important things like the comparisons of the volatility. Now, the comparisons of the volatility is very useful. Before going ahead with the volatility, you can also check the low, because this gives us an idea that there was a period between 2012 till today, efficiently, that there was a for a 1 year period you had a loss of negative 30.60. Whereas in the right side, which the portfolio we hold as a model portfolio, there was also a period, the similar period, we had negative 30.14. So this particular set of a portfolio comparisons can easily be done on any particular parameter for rolling analysis. Then we also have the volatility. So let's head over to the volatility. Volatility is another parameter which is pretty useful, because what you can do is you can actually see the standard deviation of the two portfolios flowing in time in the last couple of years. What is a 1 year standard deviation? So you can easily compare that the right side of a portfolio is actually having a higher standard deviation average. It becomes more volatile, whereas this becomes a lesser volatile. So you can actually compare the two standard deviation of the portfolio in the system as well. So it's pretty useful, because this is a rolling rolling volatility, a rolling standard deviation basically. And you can also see what was the highest standard deviation and what was the actually lowest standard deviation for both the period. So now, coming ahead with the drawdowns. So drawdowns is another set of a parameter which is also very useful when you want to see the strengths of the portfolio. For an example, I would definitely see that there was top 5 losses given here. The size of the loss which are given here, negative 30, 31, 15, 14 negative. These are in negatives, and you can see the start and the end date of these particular set of drawdown and the recovery days. So it took 127 days to recover for this particular set of a loss. Similarly, in this case as well, in the right side, you can see the drawdowns of both, the start and the end date, and you can see, the recovery days it took to recover for this size of a loss. Now here, all these gray areas you see are actually the drawdown periods. Any gray area. So you can see here we have a very huge drawdown period for 2 years for this particular portfolio. And that is how you can check the drawdowns as a strength, that if we have such a portfolio, is it making sense or not on the basis of recovery. Like for an example, if I go for a conservative portfolio, so we have saved a couple of model portfolios in our system. So you can actually add in a conservative model portfolio. Just a second. Yeah, so you can see this is model portfolio conservative. Now this is equally weighted, but the main idea here is that you can easily see that our recovery days is actually lesser in some instances in the top size of loss. So here you can actually see the differences, and the biggest difference you can easily see in the performance, because in the performance you will efficiently see that the volatility is the same, efficiently lesser than the original one, and the annual return difference is actually better than the original portfolio. So whatever portfolio you want to compare it, you can easily add any client portfolio or any such portfolio in the left side, and whatever portfolio you want to make a suggestion for or a modified portfolio, you can easily add them onto the right side. Now here, whenever I add a client, like a prospective client, for an example, right? So this is the prospective client we have added. I can easily add any other portfolio, for an example, a highly risky portfolio, right? And I can compare it. So not just this one, just a minute. Yeah. So highly risky portfolio. Yeah. So this is, yeah. So once it is added, you can easily compare within all parameters with the performance, asset allocation, uh, exposures, rolling analysis, and the drawdowns as well. Now, important thing here is that both the portfolio, this entire performance and this entire performance NAV basically of the portfolio can also be downloaded in in an Excel. So if you want to download both of them, you want to compare both of them, all you need to do is just click on this download, and one Excel gets generated. There's an Excel report. I will just show you. It just takes into consideration both of the NAVs of portfolio. So this is what these are all rebased basically for both the portfolio, which you can efficiently add them as a custom security. So if you want to compare as a custom security, you can do that. And it's pretty just a second. Yeah. So here, I hope Excel is visible to everyone. So within Excel, you can actually, if you want to add this prospective client as a custom security, you can copy this and paste it into the custom security and just validate it. That you can easily do. So let's get back to the compare section. Within compare section, there is another, great thing is to screenshot this entire comparison. So, whatever you choose, like for an example, performance, you can easily screenshot that particular set of, comparison just by clicking on this. So this is another way you can actually screenshot. And another great way is the PDF, because the PDF actually shows you that if, let's say, for an example, we want to deploy 50 lakh of the prospective client into a highly adventurous strategy. If we want to do that, what should be the case? For an example, let's say we create this PDF, we add a capital of 50 lakhs, right? And once we have added this, what we have to do is just click on go. So this is cap based, report which will be generated. All you need to do is just, I will just show you the presentation here. So this is the comparisons which we have explored before with the annual return difference. And this is, this shows you the comparisons between the YTD, the 1 year, 5 year, and even the cumulative return and annual return comparisons. Plus, you can also see the comparisons between the prospective clients within the asset allocation year, given year. And then there is a rolling analysis comparison. And in the end, which I was talking about, the capital. So capital, you can see this is, what the allocations of the capital in 50 lakh is. And this is what, the allocation you are suggesting. Now, in this case, this was an equally weighted portfolio, but efficiently, if you add in any portfolio with, different sets of weightages, that can also be, doable. So if I just go for a, any other strategy, for an example like this, I can easily create a PowerPoint, a standard PDF directly from the system, just, by typing 50 lakhs here. And I click go. So another, PDF gets generated, and you can easily see that the capital base, which I was, talking about, is where you are actually giving an action plan that this is what the client holds, and this is where you would intend to, take the portfolio ahead with the model portfolio. Now, this is, this is one use case I've shown you. There are a couple of many other use case, because portfolio comparisons, can also accept the stock portfolios as well. For an example, let's say you have a mutual fund portfolio, which we already have in the system, right? In the right side, this is a mutual fund portfolio. Let's say we add in an equity portfolio. So that we can easily add into the left side, and we can compare an equity portfolio with stocks, individual stocks, with a mutual fund portfolio. And that can become a pretty good use case, because you can easily see the comparisons between an equity and a mutual fund portfolio. And here, you can, check the entire comparisons with drawdowns and rolling returns and the exposure. So depends upon how you can use this particular set of a portfolio comparison. And there is another useful thing is that if you have, like for an example, a client portfolio, right? So let's say this is a client portfolio. One second. Yeah. So this is a, prospective client portfolio, and you want to make some modifications. Like for an example, you want to remove couple of funds from here. So you can, either remove them from the, portfolio section. So for an example, if we run this prospective client portfolio, right? This is our, portfolio which we have added. And let's say on the basis of positional overlap or, some diversification, we have seen that couple of funds do not fit the diversification. As an example, let's take a look towards one single diversification, like Franklin India Blue Chip versus FlexiCap. They both are highly correlated. You can see they are, having a correlation of 0.97. Now let's say we want to remove one and then suggest the client with another fund. So what we can efficiently do is, if we remove one of the fund, as an example, let's say Franklin Blue Chip, and we add in another fund, as an example like Axis Mid Cap, right? Then you can rescale it, and once you save it as new, so you can save it as a modified client modified portfolio 1.0. So this is added into the system. You can create it, and once you have done this modification, you can efficiently run a portfolio comparison again in the in the compare portfolios. So now you can see this is a prospective client which was already added. Now you can just type in the modified client portfolio, client modified portfolio 1.0. So this is what we have added. Now if this is making sense, if the Axis Midcap we have added is making sense or not in a portfolio, is the question which you can efficiently check just by removing a fund or two funds or three funds, and making a modification in an existing portfolio, which will give us an idea that if the performance or the drawdowns or even the asset allocation are making sense or not. So this is another use case. I will just show again. I just got a message that yeah. So let's repeat this again. Let's say you have a prospective client here. So within you want to make some changes in this portfolio, and you want to test that if the changes will make sense or not. So what you can do is, first process is to add the prospective client. Once you have added that client portfolio, so let's say I will load that prospective client, this one, right? Now, on the basis of diversification, there can be many reasons to remove a fund. Let's say we couple of funds from the portfolio, right? So let's say we remove Franklin Blue Chip, right? Let's say we remove Nippon India Growth, and let's say we also remove Aditya SL Mid Cap, and then we add a couple of other funds which we think is suitable for the client, by taking into consideration. So let's say we have added Axis Mid Cap, maybe Kena Robeco Blue Chip Equity, right? So I've added two, let's say HDFC BAF as well, right? So now we have added three funds. Now we want to test this, that if we have added this three fund with this allocations, right, will it make sense or not? So what I'm going to do is, I will save this as a new portfolio. You can see this was an original portfolio, but now I can save this as a new portfolio, right? So new portfolio, I can save it like modified client portfolio, modified portfolio 1.1, right? So now this is another portfolio we have made. And then all I need to do is just create this. If I create this, a new portfolio, a new modified portfolio of that, previous client gets generated, which was your recommendation. Then you can just cancel this up. You can see this is the portfolio which we have, onboarded. You come into the compare, you click on this compare portfolios, and you can see this is the prospective client which we already had. And now all we need to do is just search that client modified portfolio 1.1 and then add it. Once it is added, then you can easily compare the two portfolios with the changes, and the changes are the changes making sense or not, is a question. So you can actually see the annual return difference, the Sharpe ratio difference, and even the difference between the asset allocation and all. So it gives us a proper idea that if we are making this changes, what kind of a changes we can we are having on a even on a performance level, and even on an asset allocation level. So this is another great use case you can use to compare portfolios one by one on a side by side basis. Now here there is another great use case, which is actually by adding it as a custom security. So custom security is pretty underrated function. What you can actually do is, you go into this my security tab, and you can add any particular set of a price series. So as you know that you can actually download the price series of any portfolio. To download that, all I need to do is just run the portfolio and download the price series from here. Once I have downloaded the price, it will be added as an Excel, and then I can take that price series and make it as a a customized security as a portfolio. So let me just show you the price series here. So this is the price series. I hope this is visible to everyone. So this is actually the price series of the portfolio which I have shown, and all you need to do is just copy the date and the price. Now this is in a standard engine format, so you can just copy this date and price and paste it in the custom security here. So once I paste this in a custom security, you can see all the data set, all the price series of the portfolio is added into the system. And here you can easily see that uh, when the price series is added, you can easily see that for an example, let's say we are adding a portfolio, right? So portfolio number one. So you can click it as an equity and validate it. So once you have validated it, you can save it as a portfolio, and then you can actually compare any particular portfolio as a custom security in the compare section. So any price series, I have already added many of the uh, portfolios here in the left side, and you can easily go and add that portfolios into the compare section. And when you go into the compare section, you just go into this compare securities, and here you can select securities which you have added. So for an example, we have added couple of equity mutual fund strategies. So you can just add them into the system. So this is one price series custom security added. There is another one which is this conservative one which is added, and another one which I'm adding again is this one. We can also add a prospective client. So as you know that I've already added a prospective client, that can also be added into the system. Now, all the tabs which you see, you can run couple of analysis here. One analysis is risk versus return, where you can easily see the risk and return for different set of period. Like for example, if you're running these are basically all the portfolios. These are all the portfolios of the client. This is a client portfolio, and this is all the model portfolio, where you can efficiently see that between the two risk, two date points, point to point, you can see what are the risk and return, parameters of these four portfolios. Now you can also run a calendar year analysis for these all four portfolios in one place. And you can easily see for a calendar year of 2018, 2017, or even, YTD of 2022. And you can also do a very good point to point analysis, which will give you a scenario based system. Within the scenario based system, what you can do uh, is that you can actually take any particular set of date like 2018, and then you can take another date set, and this date set you can easily run your portfolio strategies and see that if in this scenarios, how has this portfolio performed. So you can easily see that the prospective client had actually the lessest return against the a moderate strategy we have added. So you can compare it for many particular date set. Like for an example, 2015, if we run it for one example like 2016, like demonetization. So you can also check that for the system, annualize it, and that is how this works out. So that's basically it. There are a couple of other things you could definitely do, is also run rolling analysis on the entire portfolio. Rolling analysis can be a big topic anyway, but it gives you that what are the average rolling return for a 1 year period from this start date to this end date, and which particular portfolio is actually having the best rolling return average. So here you can actually compare many portfolios in one single place. So this compare section is very robust. You can not just compare mutual fund stocks, you can also compare portfolios in compare section. But there is a step involved to add any portfolios. You need to add them as a custom security in the custom security tab. So that's basic it for the portfolios comparisons. We can go ahead with the Q&A. If you have any questions, we can start answering them.
Hello. Hello.
Yeah, please go ahead.
Yeah. In the custom security action, is it not possible to just make a standard valuation of, say, for example, in the tool itself, in the software itself, like the price of the gold and the price of the 10-year GSEC of particular security, something like that as a standard comparison, instead of we do search it and keep adding as a custom security?
Yeah, sure. Yeah, that may not be a bad idea. Actually, we can look into it. I mean, currently, most of the benchmark indices that we have, they are they're already updated on a daily basis. But we can have a look at trying to get gold, GSEC, etc. as the standard things and add them to all logins
Yes.
automatically, so that you don't have to keep updating them on your side. Yes, okay, we'll put that down as a item.
Right. Thank you.
Hello.
Yeah, go ahead, please.
Yeah. This is Padmanabhan from Chennai.
Hello, sir.
No, I have requested long back. I need a indices like BSE 150 mid cap TRI, BSE 250 small cap TRI, BSE 500 TRI, BSE large mid cap TRI. See, when we compare funds, we are taking only, I am taking all the time BSE large cap, BSE mid cap, BSE small cap. But none of them is following all the three. So we need to showcase our performance. We need these particular indices, but no, I have requested long back, but this is still pending.
Sure, so I think we had some issues getting direct access to some of these TRI indices. I think the regular indices are available, but the TRI for the specific ones you mentioned, we don't currently have. We will check with our data provider again. Right now, the only TRI indices that we have available are some of the nifty ones and then some debt ones. Other than that, we haven't been able to source data for it. So we will check again to see if there's a way out of it.
Yeah, and one more thing, actually, see, whenever the demonstration is showing, see, you guys are knowing left, right, center, navigation is just like that. For you is a regular affair, but most of them are not well versed in NGEN. So I would request you, see, let us assume the current speed is 100, you should reduce to 60%. So 100 should be 60%. Then only we will be in a position to follow it, and we can do it once. Otherwise, you are going this place, that place, going like very, very fast.
Understand. So we will take this feedback into account. I mean, maybe what we can do is also make the topic that we are talking about. We won't talk about too many topics in one session. We'll focus on one thing and just kind of go through that only, and then we will use it on the next Friday or something for other topics. So
that is perfectly fine, but only a request from my end is it should be little slow. So I'm perfectly okay with half an hour or 40-minute session. That is fine, but the speed can be reduced.
Yes,
that's my
understand.
This thing. And another question. See, the mutual funds are existing from 1993. Most of the time, we are getting a fund for comparison in 2000 only. So we find it very difficult. So we want some older funds. That is, we are not getting it.
We typically will have data for 1990s. The only thing is, whenever you run analytics, if the benchmark data is also not long, then it won't load. So if you can tell us a name, we can show you right now if any fund that you've tried and you did not get data.
Oh, say for example, if you take a Nippon Growth Fund, which is from 1995.
Okay, so let's try and
I want the SIP return of this one.
Right. Okay. Okay, let's first load it. So Umair, firstly, just change the benchmark to Nifty 50. That'll be the long.
Or you take BSE 50 also. Okay, fine.
So something that is okay. So now let's go to
you go to Sensex.
Yeah. Okay,
BSE
census
census
will
you
also
put, yeah.
Now let's see if we go inception, how much we get. So yes, if you chose a different benchmark that was starting late, it will only show from then. So Umair, let's just check on the chart. What is around the beginning area of the chart? Yes, so here you will get from 95, 96.
No, I want that SIP return, sir. SIP return.
SIP. Okay.
Yeah.
So let's go to the tool section. Okay. Well, let's see if yes, sir, it should work now.
95. No, it started 19. Actually, no, 8th October
Yeah.
1995 is the start date.
I see. So here our data, the entire historical data actually begins from 1996 as the first timestamp that we have. So we can check for this fund again why it's July 96 instead of 95.
And if you just click the fund, it will show you 8th October 1995. That's the launch date.
Yes, sir. So in quite a few funds, we've seen that the launch date is actually slightly earlier than the first price date. I don't know if that is because of any issues.
Oh, this particular date, I'm very sure because I have used for so many times.
Yes,
It's on 8th October 1995.
8th October 1995. Okay, so we will check.
Okay, anyhow,
later.
yeah, that is one. And why we are not getting the same thing? See, this is this particular fund we are using through the tools. Normally, what I do, say for example, if I want to see the funds which are from last 25 years, so I will not come and search each and every fund. I will go to the normal fund, normal compare, and that SIP period. So whatever be the latest period, why this is not coming to the compare section?
The one way you can do it is, well, let's go to the fund section.
No, not fund section. Go to compare.
Before we go to compare, so just fund section and then select categories. Let's do all equity or something. And let's do basic columns and then sort by age. And also make sure the compare section is empty. Yeah. Okay. So here's these are all the kind of ages that we have right now, right? So if you, for example, Umair, let's just add the first 4 or 5 funds here. So we know the age is really long. So you can add. I mean, we just
all the ages are showing as 20.88. I think there is something wrong.
So basically, that's basically the start date from which we've been given data. So 20 years will take you back to what, about 2000. Because all the stats when we calculate, obviously, we don't go we don't keep going back past the turn of the century. And because here it's basically showing you the start date of all the common funds that are that old. So if you're going to run an SIP, I'm trying to understand what the benefit will be of a 20-year versus 25-year analysis.
See, normally, when we compare SIP data, so you go to monthly SIP. Yeah, go to monthly SIP.
Yeah.
Click monthly. Yeah, you select.
So that'll be this first date before. Okay, so that's the date we've got here.
See, actually, that's what. See, for example, in this particular case, okay, this is the selection of all the equity funds. But Nippon India Growth Fund, which is launched in 1995. In fact, when you select, it shows in 96 July onwards. But that is not figuring out here.
I see. Okay. We can. So Nippon India Growth Fund.
No, many funds, not only Nippon India Growth Fund. Say, for example, Franklin Blue Chip funds and other funds, like Franklin Prima Plus. all those funds, which is which was launched before 2000.
Right. Understand. So, so we'll do another check, sir, here, just to see what the issues are. I think obviously beyond 20 years we weren't looking at the data properly. So we'll check it again. So we can make sure that this shows up in the screen. So the thing is, Nippon India will also show up as 20.88 in that list. May I just go back to the fund section for a second? It seems to be there's some kind of limit. If you just scroll down here, you'll find Nippon. Just Control F.
So they are limited to 2088.
Yeah, they just there it is. So past 20, it's not showing you any further years from there. So okay, we can take a look.
Fine.
Yeah.
Thank you, Arnab.
No problem.
Yeah. Hi, Anurup.
Hello.
Yeah, I have a query regarding drawdowns. There is a start price and end price, and days are given to those days. Like in those days, they have recovered, right?
Yes.
Just show me that now.
Sure. Yeah.
So this is end price is 187. Suppose it's a given, right?
Yeah.
So what does it mean? Because the start price, the NAV from there it has fallen down.
Yes. Correct.
So,
So
180.
yeah.
Yeah, tell me.
So basically here, it's literally going through the entire period of the fund that you've chosen here. This is from 2009, and day by day it counts whether or not the fund prices has started to fall from some kind of peak. So in this particular drawdown, 2020 to Jan to March, this is only a 3-month period. Obviously, must be at the end of the just at the start of the lockdown. So this is the highest price before that was 307 on 17 Jan 2020. It fell all the way to 187 by by the close of 23rd March. After that, it didn't fall any further. So that is the lowest price. So the drawdown is basically from 307 to 187. And that is actually in the chart, where if you could just with your mouse just show where it is. Yeah. So that area. So that's where it started and it ended. We can zoom in. So there it is. Started and ended at about 187. There it is. So somewhere around there. And then after that, it took 181 working days to recover. Now, on the way up, you can see actually here, on the way up, also it had a drawdown. So it came up a little bit up to September, then fell again. That also gets counted in the top 10 drawdowns because that was also not small. And then if you reset the zoom, let's just see that after a while, the price actually came back to the just above 300 and crossed the peak, which is 307, where it had started falling from earlier. So at the very day that it crosses 307 again, that is when we consider the drawdown recovered. So 181 days it took for the price to come back all the way.
So it took 181 days to recover the start price, right?
Yes, to come back to the start price, where it started falling from.
Okay. And so 187 was the lowest price on 23rd March.
Exactly. And this basically shows you that if you were really, really unlucky and you happen to have bought the fund on 17 Jan 2020, you would have firstly suffered a 38.97 loss. And then after that, you would have had to wait 181 working days to come back to flat on your investment.
Okay. Yeah, got it. Yeah.
So this basically effectively shows you the worst possible outcome of investing in this fund. Basically, it's never gotten worse than this for any investor in this fund.
So this was the highest loss.
Yes, there is no other combination of buying and selling. I mean, obviously, just one buy, one sell. In this fund, that would have caused more loss than this.
Okay, I got it. Yeah.
Thank
This is Raj Kumar. I have two questions. One is on the index. I think Padmanabhan requested for that. That was on the TRI index. You said that like you have requested the data provider.
Yes.
One question that I have, see, with lot of topics going around in terms of index investing and passive investing, we are trying to educate our investors in terms of taking some of our fund recommendations and proving them how this fund has beaten indices for the other categories also. Now, let's take an example. I take a fund from the thematic category and I show them this has beaten both the mid cap and small cap indices as well. Okay. So on that note, I want to know, do you have a provision to compare against Nifty Alpha 50 index? If not, can we expect that also by the time when we have the TRI indices ready? Because Nifty Alpha 50 has actually performed much better than the mid cap indices.
Okay. Umair, let's go to the compare section and just quickly check in the index list.
Yes, so need to add all the indices.
No, just check in the index list. Try to add index and just see if there's anything called Nifty Alpha.
No, I don't remember seeing it. Okay, so I thought we had challenges only with the TRI indices,
Right.
but see if you can get this Nifty Alpha index also added there.
Understand. Yeah, we will definitely check that out. So we actually have some Nifty Alpha indices in the database which are not exposed here. We will check if the data is updating, and then it will be a very quick thing for us to add it here. Is it the Nifty? I can see Nifty Alpha 50. Is that the one you want?
That's right. That's right.
Okay, so there is definitely data for us. We will check if it's updating on a daily basis or not. If it is, then we can definitely add it. And obviously here you can compare funds versus any indices.
That's one question. The other one that I had was, see, we were talking about drawdown with the previous question, right?
Yeah.
So is there a way? See, now I can look at the entire mutual fund universe and look at which fund has a better PE ratio or a price to book valuation by taking the entire universe, right? Now take the case now, like I am restricting it to a mid cap universe. So is there a way that I can find funds which had very shorter drawdown periods? Do we have something like that, or do we have to go to each and every fund and do that comparison?
Well, so the thing is, if we are comparing drawdowns across funds, the problem with it is it's possible for us to add one stat like the worst drawdown, right?
Okay.
For example, we could give you potentially we could put a column where you could sort through funds in a category to see which one had the best or worst largest drawdown. But the issue is then there is a second largest and third largest and fourth largest also. So if we're looking at just the worst drawdown, so Umair, just go to the next tab, the ICICI Pru that you have opened up, multi-cap fund on top on your Chrome. Yeah. So here on the drawdown, so we can compare the top line for all funds, but then it will not give you any information about what the next one is. And sometimes what happens is you can have idiosyncratic losses, and the worst one is
no. So what I'm asking is, it need not be the same period for different funds in the same category. Now take the case of Invesco Midcap. Okay, so Invesco Midcap is still trying to recover. I was just doing a comparison between Invesco Midcap and Quant Midcap in terms of the drawdown period.
Yes.
The maximum days taken by, see, you don't have to compare based on the first line. You can compare it by the column, last but one column, days to recover, right? Now you can take Invesco Midcap or similar funds from the midcap category and compare it against the days to recover. Now for this fund, I'm not sure. I think 181 is the maximum day. 514 is the maximum number, right, for the days to recover.
Yes, sir.
Okay. Now I don't have the stat for multi-cap fund, but now let's take an example of Invesco Midcap that I told you. The maximum drawdown that I see is 199 days.
Okay.
Okay. So now I want to scan the entire midcap fund universe by the days to recover column that we see under the drawdown period and want to know which fund has got the maximum drawdown and which fund has got the least drawdown.
Right.
You get my point, right?
Yeah.
So is there a way that I can do that?
Okay, so you're basically saying take the worst days to recover for each fund.
Worst period, the max period. See, what I want to know is like I want to know which fund is quick in terms of recovery. Okay, for that, I would rather focus on eliminating funds which had higher period of drawdown.
Yeah,
Correct.
so sir, here the only thing is the recovery days for one option could be for a drawdown that was very small, and the recovery days for the other fund could be for a period that was quite long, and the loss could be different numbers. If we only look at 199 here.
No. You can choose the max of this column, right? Days to cover is one column. You can choose max of this particular column data, and then compare it with max of all the other funds for the same column, right?
Sure, but the only thing is the max of the column for different funds will refer to different loss amounts. So one loss amount could be very small. So for example, it's not a very good thing that it took 20 days to recover a 5% loss, even though 20 is a small number. So what I'm saying is the days to recover will be subjective, because every fund's worst drawdown or worst recovery from a drawdown, the drawdown period and the drawdown loss will be different in every case.
No, I agree. I certainly agree that. See, the point is, this fund has been taking a lot of time to recover. But
right.
Just want to know if there is a way, because like now, if I have to do this, I have to manually open each and every fund and then see like if it has taken a long time to come. So is there a way that I can sort by some option to get it, or do you have any plans to get that in future?
So sorting on this table, or you want to actually see the number for various different funds in one place?
Exactly, the second one that you said.
Okay. This we can to get the worst recovery period. Yeah, I mean that's definitely possible. I don't know if I can commit any timelines. We can definitely.
No, that's fine. That's just a recommendation.
Consider.
Yeah, thank you.
Perfect. Thank you, sir. Thank you. And just so you know, sir, I just checked the Nifty Alpha 50 data is there. So I don't think it should take more than a few days, but you'll start to see the Nifty Alpha indices on the benchmark list in about a week or so.
Thanks, Arnab.
No problem.
Arnab, thanks a lot. Actually, you guys are conducting every week and updating all the information. It's really useful. And many of my friends who are using the other competitive product also find it very useful. So wherever possible, in fact, whatever the data I'm tweeting, I'm using only NGEN. People are asking, which software. I'm telling NGEN everywhere.
Thank you, sir. Thank you so much. I hope you got time to check out the insight sections. Please do have a look.
Yes. But insights at what frequency it will be updated? Is there anything? So see, the point is, do we need to check, say, for example, every Monday, this particular thing, or every date or something, or you will update, as and when you get the.
No, sir. So we have a reasonably set weekly schedule. So usually on Wednesday and Friday we release. One more thing is, sir, you will actually see a little round new message icon. Just like your phone, like a new email icon. Yeah. It will show up here. Little round button will show up here with number 3, number 4. That means 3, 4 new things have come. Once you click on it, the system will record that you've seen it. It will stop showing you that. Just like your email. So every time you don't have to remember to check. You just have to remember to see that whether or not there's a new icon coming up on the left menu. So whenever you log in, you'll see some new insight has been updated. You might find it useful. If you do, you can download or just look at it if you want. And we are also putting these on Twitter also sometimes. So
I have a question, sir. May I ask?
Sure, go ahead.
Okay, this is Narayan. I had passed on this feedback as well through Ajay. these insights on a serious note are quite attractive data to share with the clients.
Sure.
Not the existing client, but maybe with the prospects and other, just to build sort of credibility about your research.
Yes.
Is it possible to have co-branded these data infographics, where our logos will come somewhere?
Yes, we've actually got quite a few requests for this. So we are looking for a solution to do this, because obviously it would involve merging two images, but online, not on the server side. I mean, it's a technical issue. But when you just click on one of the insights, what we potentially can do is right at the top, just above NGEN Markets, we can create a long frame, and that can have your logo and maybe on the right side your company name as you configure in the settings section.
Right.
That is, I think that is possible. Will that suffice for you? Because then it will definitely look like something that you.
Yes. So having NJ Markets, the name and logo, everything is okay. Like in the reports. Otherwise, when we download this PDF or a PPT,
Yeah.
then on the left hand side, the NJ logo will be there, and the right hand side, our company logo will be there in the similar fashion.
Okay. Yeah, so I think that is possible. We are working on it. So I think hopefully quite soon you should see something coming up here. So when you click on it, it will open up with your logo and you can download the total image basically.
Yes. Yes.
Yeah.
Okay. Thank you.
Okay. Thank you.
Sorry, one more, just this one.
Yeah, go ahead.
Similar to this same. Now these infographics, your team basically is making it, and just sir, as he suggested, if you can fix up a date, like by 5th of every month, this data will be populated. By 10th, this data will be populated, like this. In case there is a calendar, it will be easy for all of us to download and share the latest data with the clients.
Okay.
Secondly, if possible, there can be if we can make some feature over there wherein we can select the parameter and the data, and that can come out as a graphic, if possible.
Yeah, so for the first thing that you suggested, obviously we have the little message icons coming up on the left. And on top of that, we are following a schedule of Wednesdays and Fridays. So I believe today some will go out. But yes, we can probably think of a calendar as well. We could do that. And secondly, for kind of automatically creating these insights, we'd have to look a bit deeper into that, because these insights are not. I mean, there is some part of it is automated, but the entire thing is not automated. I mean, somebody in our research team has to sit and think, okay, let's talk about inflation rates today, or let's talk about something else today. So it does require manual work. So for us to kind of generate this while you're working on the platform, we'll have to think of some way to actually make it work through our website. So we will look into that. So we'll try to see what's possible.
Sure. Thank you.
No problem.
In the large cap session,
Yes, sir.
Edelweiss large cap has Edelweiss large cap, Edelweiss large cap, plan A, plan B is there. Actually, plan A, plan B is not at all existing. So can you remove those two things?
Yeah, so we've removed quite a few, sir, from our last conversation. I think we had about that.
Yeah, you just check. You just type Edelweiss large cap.
Just check, Umar. Large cap. Okay, some plan B and plan C is there. But they will most likely not show up in the funds compare section. But okay, fine. So we will check this again. But I think most of them have been taken out.
Most of them taken out. See, because when we compare funds, actually, it is coming entire thing.
Okay. So then we will have a look at it.
Similarly, I think the same issue is there with Aditya Birla funds as well.
Okay.
Like this Aditya Birla savings fund. So whenever we
savings
a category, maybe in case we select, so we are having two schemes in each category.
I see. Okay, so we will definitely have a look at that.
Below also, if you see two funds are there.
So, sir, one is one is direct, one is growth.
No, correct. And this is correct. So I'll do one thing. I'll just maybe get back with the exact scheme name.
Perfect, sir.
Somewhere
will
where
check it.
it's happening 2 times. Yeah.
Okay, sir. Thank you.
Sure. Thanks.
Are there any more questions from anyone?
So there's a question called, hi, from where can I get model portfolios?
So we don't supply model portfolios as such because we are not we are an IT company, tech company. We are not allowed to provide advice. However, having said that, we are currently working on a strategy section. You actually may have seen some of them while Umair was doing his demo. Those strategies have been created using completely automatic rule-based methods. So once our strategy section is live, it will show up on the left-hand side, and you will be able to kind of browse some systematically created strategies, to get inspiration to create your own ones, basically. Those will be coming there, but we do not create model portfolios in terms of kind of making them for you, because that we don't have permission to do that from SEBI. Okay, perfect. If anybody has any questions, please do let us know. Okay, I think maybe we can go ahead and close up for today.
Thank you so much, everyone, for attending this session. And yes, we have taken the feedback, so we will be slowing down our demo session for the next training session for the next coming weekends. So thank you, everyone, and have the nice weekend.